Hello, everybody. Thanks for joining us. I'm excited to be here with Richie Etwaru. He's an expert in blockchain, and it's a real pleasure to be here with him. We are running an event. Morris Tech Meetup is hosting a Block and Coin Summit called Navigating the Cryptoconomy, and Richie here is starting us off on the blockchain portion of our event. I also want to really quickly mention Fairleigh Dickinson University and Morris County Economic Development Corporation that are also hosting this event with us. Thank you for being here. I really appreciate you taking your time. I know you wanted to be at the Block and Coin Summit, but the schedule was, you were unavailable that day, so it's very generous of you to let me into your home and have this conversation with you. So thank you for being here.
Well, I'm really, really happy that we could do it. First of all, I think just New Jersey. I'm a Jersey guy, and I see New Jersey as the Silicon Garden, if I may. Not that there's anything wrong with the Silicon Valley. Right. I'm just saying I see New Jersey as the Silicon Garden.
That's great.
That's first and foremost, and second, I think we're having a discussion about blockchain specifically across the world. I think I'd be remiss to call myself an expert. I think more or less, I'm learning as much from the conversations of the audiences as I think they might be learning from me. It's an emerging topic. Mm-hmm. It is one that promises, at least from my perspective, promises to change commerce and humanity significantly. And when you make a statement like that, it's hard to substantiate it without giving it a timeline, mm-hmm. right? This is not something that I'm talking about for 2018. This is not 2019. This is probably more, I'd say, within the 10 to 25 year range. Mm-hmm. Right? Now, having said that, are there things we can do in 18 and 19? Yes. But if you're looking for the use case for your next project so that you can make your bonus this year, right, this is probably not the place to start. But if you're at a point in your career or in your organization where you want to build something that can truly leave a positive mark on the planet, then I don't know where else you would start other than here.
Right. I feel that for those that might have missed the dawning of the internet in the early mid-90s, it was an exciting time for us. I jumped in kind of late 90s into working with internet companies. A very exciting time. But at the time I was working with them. I wasn't more of a leader or an executive where I have that opportunity now as you do. And we thought maybe perhaps a chance like the internet only came along once in a lifetime. And now here we are again with the blockchain. Yep. I feel like it's a more profound discovery. I call it a discovery, not an invention, because I feel like it was just waiting for us to discover how great it is. And for business models to migrate to it is going to be an exciting time for us, as you say, over the next 25 years.
Yeah. To me, it's appropriate to associate it to the internet. I've been caught guilty of saying the following phrase over and over. It's becoming like a tagline that I get quoted now, right? Bitcoin is to blockchain what AOL chat was to the internet, right? It's a first instantiation of it so that you can really get a sense of it. So I love the fact that you say it's a discovery. I'd felt like I'd missed out on the internet. To be honest, did I have a career that is sort of interesting? Yeah, but did I really take advantage of the internet? No, not at all. I didn't get to reap the values, and I certainly didn't shape the face of humanity by inventing something that was internet founded. So when I landed on this new protocol and started to look into it, and when sort of I discovered what I think other people had discovered already, albeit maybe a couple of hundred people only in our species, that it's about that moment of where you exchange data, that the data that comes at you today kind of winks at you and says, hey, don't worry, trust me, you can trust me. Right. And we can all move to a place where data comes to you and say, hey, I'm data, I'm trustable. There's an easy algorithm to test whether I'm trustable or not. Mm-hmm. And that can happen in terms and conditions, in the inventory of amount of stuff that you have, your price points, everything, every single piece of information that we exchange with each other can go from that world where the data is like, don't worry, I'm data, trust me, you can trust me, and you have no idea what massaging was done behind it, to this place where data comes at you and says, I'm data,
Yep.
Don't worry, I've got a nice algorithm you can test to see what sort of massaging happened before I got to you. It really was a discovery. And so what I don't want to do today, and what I'm hoping that all of us here today do, is not try to invent AOL chat again, like I did when I was a teenager. Right. Recognize that this thing has a long runway and be a part of how we venture and how we create capabilities around blockchain, not only to reap profits, but also to contribute to shaping the world.
Right now, most of the conversation is around the financial industry. Obviously, the cryptocurrencies, people equate it with that, particularly people that aren't that immersed in the blockchain-based industries. If you talk to kind of the person on Main Street,
yep.
If you ask them what the blockchain is, a lot of times they said that they never heard of it. So maybe you say, have you heard of Bitcoin?
Right.
And like, oh, of course, I heard of Bitcoin. But talk about some of the things that can be used once we get beyond the cryptocurrency craze.
Yeah.
And you'll always need, maybe not always, but you need cryptocurrencies to kind of grease the engines
right.
of the blockchain and kind of make it happen, give people the ability to want to transact on it and make some of the applications happen and people get paid for it and things like that. But let's talk about some of the other ones. In your book, you talked about, for instance, things like the authentication of art. You talked about real estate
yep.
and some of the other things. Talk about how we could use blockchain
for things other than cryptocurrency.
Yeah.
Yeah.
And then the need for it and how important it is.
Yeah. So I think for the folks on Main Street who doesn't have the perspective of the folks on, let's make up a new term, Geek Street, yeah. right? Bitcoin is one instantiation of the blockchain protocol, arguably the largest and the first, okay? There are other instantiations of the blockchain protocol. Ethereum, obviously, Hyperledger, Corda, Ripple. I mean, you could just see them one after the other. And while a lot of the base inventions are the same, asymmetric cryptography to be able to chain records together and using either proof of work or proof of stake to make sure that you take distrust out of the system, the apps that you can build on top of it are different. On the Bitcoin blockchain, it's not a Turner complete language. So you can't use something like JavaScript or something where you can really write interesting use cases on it. It's a little bit more of a sort of a difficult to understand scripting language, where a very powerful use case is written, which is to prevent double-sided spending. So that will essentially be what it is. And yes, we need finance in order to transact, much like we still use iMessage on our iPhone today. It's still AOL chat, but it's there, right? What I think is interesting is when you look at the other blockchain protocols. So when you look at things like Ethereum, when you look at Hyperledger, when you look at Ripple, when you look at Corda, you can start to write other use cases other than double-sided spending, okay? So you can start to transact with things other than money. You can do ownership of a piece of property as the data point that you transact in between. Just like how you can prevent double-sided spending, you can prevent double ownership of a piece of property. What I've started to kind of discover, I love this notion of discovery, right? What I've started to discover as we start to move away from these financial use cases or these financial related use cases where everything's a coin and everything's a currency, and we can talk about whether ICOs are good or bad or scams or not in a second, right? Once you start to move away from that, you start to realize that if you think about things like reputational data, right? Our identity, our credit worthiness. I mean, in the US, we think we have a pretty good system around our credit worthiness when we realize that we actually don't. Our system is one of us don't get it right, so there's actually 3 companies, and the way you do it is you take the average of the 3 companies to figure out what someone's credit score really is, albeit 31% of them has errors inside of them, right? So when you think about things like,
it's a big hack.
yeah, yeah, when you think about things like identity data, right? Who are you? What are your rights? What do you own? And what's your reputation, reputational data? Those data sets, as you start to build use cases through them on the blockchain, you can start to see intermediaries being taken out all the time. The Department of Motor Vehicle is a great intermediary for identity, right? The passport and the passport organizations are great intermediaries for identities. So you start to see those things start to come out. And to me, those are sort of the obvious, where if you're looking for a use case beyond Bitcoin, look for a use case where there's a massive intermediary that doesn't really add value, that's not doing a good job, and is actually a bit of a hindrance. The DMV, the credit reporting agencies, that type of stuff. Very easy, right? And identity data and reputation data is not just humans, it's actually businesses as well, right? I think over 1/3 of Yelp reviews are fake, right? So think about how restaurant reputations are put together, and think about a use case where when the diner decides to write the review on the restaurant, there's a smart contract that has to bounce that off the POS system to make sure that you actually purchased the shrimp that you're writing about, and also bounce it off your credit card system to make sure you did actually dine there, and your GPS on your phone has to put you at that location before you can write the review, right? Because what you find out is actually the restaurant down the street is paying people to write negative reviews about your restaurant, right? So that's reputational data, not to human beings, but to an organization. Where it really gets interesting is when you start to talk about use cases around data sets that don't have intermediaries right now, because it's either too expensive or too cumbersome to have intermediaries, and as a result, we just kind of live with it. Like inventory data, for example. When you buy a limited edition version of something, how do you know that they didn't print 20,000 of it, right? Or manufacture 20,000 of it? These are data sets where we don't have intermediaries because it's too expensive and too cumbersome. And so we just kind of trust that it's there. And that's why you see a lot of the distrust and disenfranchising behavior that happens within our species, because, I mean, this is who we are, right? So when you get past the obvious, which is like, okay, where are there other intermediaries that I can just disrupt? Right? Reputational data, identity data, all that type of stuff. Then you get to stuff with, whoa. Where are there intermediaries needed that we simply haven't put intermediaries in because it was too expensive or too cumbersome? And now you see this linear progression away from financial data, which, yes, we need to solve for that, and we're sorting to solve for that, right? To everything, to inventory data, agreement data, identity data, reputational data, corporate data, if you think about our corporate returns and the markets and pricing, and supply and demand and high frequency trading, to really understand what's going on there, you get to a point where I believe we will move to a place of where I call it economic freedom. And it's not like universal basic income. That's not what I'm talking about. I'm talking about the ability to know where the value that you contribute for your pay, where it goes. And to understand where the value that you're paying for when you buy, where it truly comes from, right? That type of transparency is just massively missing within our civilization right now. With the invention of the limited liability corporation, we can put this magical circle around us called Marc and Richie's Seafood Inc. Okay, and tomorrow someone eats our food and doesn't happen, we have limited liability, right? We're protected. And within that bubble that was well intended to facilitate commerce, to de-risk it so that people could actually build companies, right, and not put their entire families at risk, we started to do a lot of interesting things. We started to do interesting things like marketing. Marketing will be looked back at as a really, really silly behavior, which is an open permission for us to lie about our products and services and misrepresent what they are to each other. Okay? Just let that sink in for a second. Okay? 400 years from now, people are going to look back at us and go, they had this strange thing called marketing that allowed them to lie to each other openly about their products and services and completely overinflate expectations so they can drum up the desire in each other to buy things that they didn't need in the first place. And so when you start to inherit from that perspective, now you start to go, okay, where is truth and transparency in the economic system? right? It's not that I don't want the car manufacturer to make a profit. I want them to make a profit, but I don't want them to bend me over on a barrel every time I purchase the car, right? So this is why in the title of the book, I say every company is at risk of being disrupted. And you know, we took this out in the editing process simply by a trusted version of themselves. The word simply got removed because there was a little bit of an overstatement from the editor's perspective. But if you are Coca-Cola today and you sell your Coca-Cola for 99 cents, okay? And in the back it says 0 calories. Who knows whether it's there or not? And it says no sugar. Who knows whether it's there or not? And I come out tomorrow with a similar offering. Tastes just as good. Can looks a little bit different. And I go, I'm Richie's Coca-Cola. I'm just like Marc's Coca-Cola. The only difference is I give you a completely transparent supply chain of the manufacturing process and all the ingredients that went to it and the cost that went into it. And by the way, he's selling for 99 cents. I'm selling for $1.09. I recognize that I'm 10 cents more expensive, but you can trust that what's in here is actually in here. And you can see that my profits that I'm making are not bending you over the table or the barrel, so to speak. A trusted version of you.
Right.
And we're seeing examples of human beings buying trust and transparency in all aspects of commerce. Food, farm-to-market restaurants are a perfect example. We will pay a premium to go to a farm-to-table restaurant. I don't know that the chicken came from a farm, but just the offer, okay, just the offer that you are willing to open up the curtains and show me behind how the sausage is made, I'll go, I'm paying for that, man, because I'm tired of being bent over the barrel by the opposition. Right? This is what the protocol really brings to the table. And when you get into this conversation, and guys, thank you for going on this sort of silly or weird journey here with us the last 2 minutes, you almost forget about Bitcoin.
Yeah.
I forgot about Bitcoin for the last 3 minutes. That's why the protocol is so interesting.
That's
when you have a data set that is trusted and transparent, and you can see changes in that data set, you can see fraud, okay? And fraud can be easily identified and taken out. Now you can sit comfortably and go, yeah, let the contract execute. As long as the data says it's there, let the contract execute, right? Give you a really, really simple example. You know, sometimes when I go to Syracuse University, I hire someone to drive me there because it's easier for me to spend 5 hours in the car working as opposed to 5 hours in the car driving there back and forth, okay? And whatever, let's say it's $100 or $200 I have to pay a driver once I get back home, right? Once I get back home, I got to find the cash to pay the person, or it's a credit card, or I do a Chase Quick Pay or something like that. You know, I would want a system that would be built on top of that that has the GPS location of my car and my heartbeat on the blockchain, okay? And as long as I get back home and I'm still alive, you know, within a certain amount of time, automatically $100 or $200 should just be paid to that guy, right? Do you follow what I'm saying? So very simple example.
Transit, he doesn't get paid.
Doesn't get paid, right? If it's an accident and I die, it doesn't get paid, right? There you go. So really simple example, but you can see how the fabric itself, because what it does is it allows you to know whether you can trust what the data says. And as long as it says that, you can start to transact on top of it. It makes smart contracts very, very, very important, right? To me, if I were to draw another analogous, you know, smart contracts are to blockchain what HTML is to the internet, right? HTML initially was not a part of the internet, right? The markup language is what allowed it to enter commerce, you know, first by putting up storefronts. Right?
But when you talk about the internet, then you're talking about like the 60s internet.
I'm talking about the TCP/IP protocol.
The HTML wasn't part of it originally? Like
you know, the hypertext markup language, right? Which is
Berners-Lee.
Right. So this was a way to describe all the information and to be able to sort of standardize how browsers will see it and consume it. But the underlying fabric of TCP/IP, of being able to exchange data from point to point, regardless of what the format of the data was or how it was marked up, right? It was highly accelerated by HTML, right? So smart contracts, to me, are the part that will highly accelerate the fundamentals of blockchain into commerce as we see it today.
What were you doing before you got in a block and before you started thinking about blockchain? You had written a book as well earlier. Then you wrote this book called Blockchain Trusted Companies. Tell us like how you got into it, why you wrote the book you did, why the world needed it, and you know, your evolution a little bit there.
Yeah, so I'm a bit of an antibody within a host, if I may, or an antibiotic within a host, right? I migrated here at 16. You know, by 24, I was venturing. By 27, I'd exited. My mom, my brother, and I, we migrated here with less than $100 in our pockets in like 1992, right? From one of the poorest countries in the world. So my first part of my career was very surreal for me. I remember several times where I'd be in an important meeting or like on a stage somewhere, and I would look around going, these guys are going to figure out that I don't belong. You know, like I don't come from an Ivy League school. I don't have a trust, you know, fund behind me. I don't have a fancy last name. At the time, I didn't have an optimal, you know, my skin color wasn't an optimal skin color to have at the time, right, within economic circles. About maybe 7 to 10 years ago, I think I finally got to a place where I started to go, okay, maybe I didn't belong here before, but I kind of fit in now. So I got comfortable with my projectile. And I started to really think, particularly since after you make a couple of bucks, you can really start to focus on what do I do, not how much do I make. Right. And as around that same time that I started to really study the history of knowledge, and early parts of my PhD really starting to get into, wait, so there are no truths, it's just what we agree on? So everything is questionable? Oh man, this is awesome, right? So around that same opening of my mind around the history of knowledge, as well as me saying, okay, it doesn't matter how much I make, but it's what I do, and then arriving on sort of this protocol, early stages of it, the blockchain protocol, which was mostly Bitcoin at the time, all of that serendipitously in a bucket got me into a place where I go, I got it. I finally have a shot to question whether I need the mousetrap or not, right? And here I am today, a decade after, going, you know, the tact of the quarterly reporting system is what actually stifles large companies from being able to take advantage of large paradigms of the future, right? And this notion of focusing on profits only is actually what impedes us from being able to, at hundreds of millions at a time, ask ourselves, do we need a mousetrap in the first place, right? So that's sort of the journey that I took to get here.
That's great. And your choice to research trust as essentially the backbone, you know, you came up with that, I believe, in the book, more so than anywhere I've read. I've heard the blockchain compared to the internet. Internet was a transfer of information. Blockchain is ability to transfer value. There's different, people have different like paradigm ideals around the blockchain. You came up with this very unique perspective of trust. How did that, you know, how did, I guess, your career up to that point or your research up to that point give you that wow moment that it's, you know, trust is the backbone of what the blockchain is all about?
Mark, you are asking a question that is getting to the core of my ethos. And I don't think anyone's ever asked me this question before, and I've never answered it before publicly, but I will answer it. There was a point where I got to a vantage point where I can see commerce. And it wasn't because I was senior or an executive or well accomplished. I had played in the financial markets, in the risk markets, in the pharmaceutical markets, in entrepreneurship, in large companies, in academia. I had been able to see a vantage point or have a vantage point of view. And I remember very clearly where I looked at the whole thing and go, holy crap. It's completely disenfranchising. You know, there are large segments of commerce and government that just taking advantage of other people.
Yeah.
And I didn't necessarily, I'm not like a conspiracy theorist or a revolutionary or a super liberal. I was just like, oh man, the whole system's kind of rigged.
Yeah.
You know? And I didn't come from a place where I was comfortable knowing that a rigged system is okay. Right? I didn't grow up where the rigged system benefited me. I sort of hacked the system through, where I was one of the ones being disenfranchised and kind of hacked my way through. And when I got to that point, I was like, oh man, I really got to do something about this. Like, I cannot spend the next 20 years of my life continuing to rig an already rigged system, right? And that was enlightening for me. The other thing is I started to think about what are my strengths and how can I make a difference? Right? Again, I don't have a platform of family or history or political connections or anything like that. How can I make a difference? And I landed on this chart about 7 years ago that I drew. I don't even remember what led me to draw the chart. But I was starting to look at how people had changed commerce over time. And what we had done is we had reduced transaction costs significantly over time. Okay? And what we had done is we had increased transaction speed significantly over time. So we're reducing transaction costs, increasing transaction speed. But transaction trust was left to fall to the bottom.
Okay.
Okay? And I started to look at, like, what is the trust in a transaction? What is it that Uber did that allowed us to trust a complete stranger? And how did they go about it? By the way, they're going to record it. History is going to reflect Uber as one of the most distrusted companies in the world, right?
Although at first when they were built,
initially, yes,
nobody trusted them.
right.
Like,
but how did they hack trust, right? And you look at Etsy, and you look at Airbnb, and you look at all the things that we depend on now and trust. And I realized that there was not a systematic method or at least agenda around making sure that we can continue to trust transactions over time. And so I latched onto that going, okay, I get it. So there's been transaction speed, which has gotten faster and faster, transaction costs, which has gotten lower and lower, but who's really solving for transaction trust? And I love the fact that you call blockchain a discovery, because blockchain was a discovery for me in the midst of some soul searching, where I was trying to figure out, how do I help unrig the system? Okay, or at least slowing the rigging of the system. I land on this protocol and I'm like, oh man, this really works well together.
Right. You mentioned earlier in this conversation as well about we're going to know the histories of everybody. You know, you can't change things on your resume and things like that. And that's great for people that want to verify information about you,
right?
Outsiders, but you want a second chance on things. You made a mistake when you were young.
Yep.
How is that going to affect people? Because now everything's, in the future will be verifiable on the blockchain. I can't get a second chance anymore.
Yeah.
Kind of. Is that?
Well, it's an intellectual cousin to the notion of young people are posting all sort of stupid stuff on social media right now, thinking that they can go delete it 10 years from now. Yeah. Right? Recognizing that delete just means delete it from me being able to see it. It doesn't mean that it's completely gone. Right? So I do think we're going to have some of that, which is how do we solve for rehabilitation, right? And how do we really think about how we consume some of this stuff? But we can't even start to have the conversation today because we don't even have a data set that we can look at and say, yes, this is the data set that we're all at least going to agree on is the facts, before we start. So I think again, I go back to this exciting time that we're in where hundreds of millions of us, for the first time in the species, in the history of our species, can have these types of discussions about something as fundamental as blockchain. Right? And we're going to have a lot of stuff that we're going to have to pontificate about. And quite frankly, I don't think there are good answers to many of the questions right now. But what is undeniable is that we have an improper fraction in the marketplace between transparency and trust. And again, what I'm loosely coupling being bending over the consumer over the barrel. And I think that is, we're sitting on the precipice of a revolution, right? And I think revolutions happen when you have three things in place. One, there's a simple argument that there's a better way. Okay? In the argument that data comes to us today completely lie-infested and says, trust me, you can trust me. And data will come to us in the future and say, I'm data, here's a quick algorithm to test whether I was maneuvered or not, or manipulated or not. That's a better way. It's hard to argue that that's not a better way. To me, that's the first ingredient of a revolution. Okay? The second ingredient of a revolution is that the hands is in the power of the young. Very rarely do you see the elderly of our species creating revolutions, okay? And this is one of those times in our history where the young not only have the spending power, the future spending power, which they always had, or they always have, but they also have right at their fingertips, literally, the ability to reconstruct commerce and take us into this trust economy, where the incumbents don't have a good defense mechanism because it is trust that is the differentiator. Yeah. And that's the second ingredient of a revolution. The third is the revolutionaries have to believe that things will happen quickly. Like no one starts a revolution today because 100 years from now we want something better, right? You want to see benefits within your lifetime. And the speed at which blockchain is moving at, and the amount of coverage that we're seeing, and the size of the segment of our population that are talking about it is telling me that we're going to see changes in our lifetime. And when you see those three things line up, whether you're on Wall Street, you're a private equity investor, you're a VC, you're the Pope, or you're a startup person, you have to look at it, and you will be really, really, really misjudging it if you don't realize that there's a revolution in front of you.
Right. And you call it, in the book, you call it institutional revolution.
I do. Because I think the nature of the institution is going to change fundamentally.
I really appreciate you taking the time today. In conclusion, it seems like as the technology evolves, we definitely are going to have to also think about those moral, cultural, ethical issues as we go along, and hopefully don't think about that in hindsight. We do it concurrently as the technology evolves. But you have brought a lot of great points to us today. Everybody, please read Richie's book, Blockchain Trusted Companies. It's available on Amazon. And any final words for the group? It's a 2017 Block and Coin Summit, Navigating the Cryptoconomy.
Final words is I'm really sorry I couldn't be there. Whenever you guys do this again, if I would be so lucky to be re-invited, I will try my best to be there. And final thought, Jersey, Silicon Garden.
Love it. Thank you very much. I really appreciate it.
Thanks, mate. All right.
All right.